Good morning at Metropole TVKE across all your social media platforms. My name is Simba Elijah Charles Kiage. This morning, we do have an interesting conversation to get into in as much as your economy is concerned. And let me take my time to introduce the panel that is joining us this morning for a proper conversation. Let me start with Justin Mwangi, who's an investment analyst. Justin, good morning, sir.
Good morning, Sim. How are you?
Fantastic. I'm happy to have you around. Let me also cross over to Alice Anangi, who's a cryptocurrency trainer and founder, Zidane Technologies. Alice, good morning and a happy 2022. This is the first time that we're talking this year.
Good morning, Simba. Yes, happy new year and great to be here.
Happy to have you around as well. Lastly, we have David Gitonga, who's the managing editor, Bitcoin KE. Dave, good morning, sir.
Good morning, Simba. Nice to see you again.
Happy to have you around. All right, let's begin with Justin on that particular first area where BAT shareholders will get a record 5 billion in dividends, which translates to 53 shillings and 50 cents per share, or a total 5.3 billion for the year ended December 31st, 2021, after revenue jumped to 25.4 billion. Now, the company's profits for the period under review jumped by 18% to 6.5 billion, which enabled the cigarette maker to raise its dividends by the same margin as the 45 shillings per share it paid a year before. Now, this payout follows an interim dividend that BAT paid for the 6 months that ended June 2021, with the dividend consisting of an interim 3 shillings and 50 cents per share that was paid for the 6 months ended June 2021. While announcing the results, BAT indicated that the easing of the COVID-19 restrictions created an enabling environment for the business to thrive, while also crediting continued investments around their brands. Now, the record dividend payout represented a yield of 11.4%, going by last week's closing price of around 468 shillings per share, the third highest at the boost after Caberset that has a hit of 14.8% dividend yield and NSE 12.97%. Fantastic. Just before we cross over to Justin this morning, let's look at that data set from BAT so we can actually talk about it. Now you can see a dividend per share, that point that we ended from 2017, you can see they were actually at a 26 shillings from 2017, sorry. Now if you cross over to 2021, that has continuously grown from the 45 shillings in 2020 to the 53 shillings and 50 cents. And at 2021, what a stellar performance around that area. Let's cross over to the next one. And if you look at the BAT performance, then we're talking about 2021 year ended the 31st December. And you can see that profit after tax, 6.5 billion. And the net revenue was at 25.4 billion. And that area and the gross revenue closes in at a 40 billion. Let's move on to the next indicator this morning. And if you look at that profit after tax trend from 2017 to 2021, they were at 3.3, and at 2019 was the worst at 3.9. That was the only time they went down in terms of that profitability trend. 2020, when a majority of NSE stocks were complaining about the effects of the coronavirus pandemic, in fact, even cancelled dividend payouts, BAT was at 5.5 billion, ended up paying 45 shillings per share. And in 2021, they closed in at a 6.5 billion. That's where we are. Justin, looking online last week when they announced this result, one word just kept on coming out: stellar performance. Would you share the same sentiments going by this BAT's number?
Definitely. I think the word stellar is the most accurate description of the performance of the company. BAT for a while now has been a really good company to invest in. They have continuously performed really well. They're a mature company. You're assured of getting good dividends, regardless of the period of time you're in, whether it's an election year, whether it's a pandemic year, whether there are issues with the currencies, debt, etc. So yeah, I believe this is a very, very good performance. The most encouraging bit to it, of course, is the focus on cost management, because for a company that is as mature as BAT, don't expect revenues to be increasing year on year significantly. So as long as they're able to keep managing their costs, then we'll keep seeing such good performance from the company. So yeah, I did very good performance from the company.
Pretty much. Now, let's go back and look at that particular performance. If you could actually give a breakdown, Richie, again, of their performance in 2021, because that's exactly why what they keep on indicating from time to time. Justin, if you look at their gross revenue, it comes in at 40 billion. Net revenue, 25.4 billion. In fact, we start from there. And their net revenue was 25.4 billion. Profit before tax, 9.3, profit after tax 6.5 billion. Time in, time out, again, Justin, they keep on saying the tax regime in this particular sector, in fact, they're saying in this particular industry, is the one that keeps on hitting us in the wrong way. Would you agree that indeed for a company that comes in with profit before tax of 9.3, ending to get 6.5 billion after tax, that's too much taxation?
You see, what the main issue here is the product that BAT deals in.
Yes.
If you look at the company itself in terms of how it's managed, production, the quality of products it puts out there, it has so many positives. But its biggest challenges, other than of course the illicit trading, is regulatory overreach. Time and time again, we have seen taxes being increased. If you look at just from 2015 to date, taxes have increased at least 4 times. Then last year we had, of course, then KRA announcing that it's going to adjust its excise duty as per the inflation.
Yes.
So going forward, so we are likely to see BAT suffering from increased taxation. Now, the disadvantage of this is that as a company, you can't take on that full element. So they end up increasing the costs of the products that they're offering. So yeah, I think yes, there's definitely a lot of tax overreach from the government when it comes to BAT, but it's not unique to Kenya. Across the whole world, we see a lot of high taxations across sub-Saharan, even in UK where BAT is headquartered, whereby companies that engage in products like this that have tobacco content, they are forced to pay a lot of taxes. Even when you look at advertisements, very limited. BAT cannot advertise, for example, in Kenya. Even when you look at the packaging, they have to use for lack of a better word, very grotesque images on their packaging, just so that they can be able to ensure whoever is taking this product is fully aware of the negative health effects. So and then you look at the country, there are so many lobby groups as well that are clearly against the use of tobacco and related nicotine products that will continue to pressure the government in terms of, so that the government can protect its citizens against the adverse effects of tobacco products.
Yes.
What this ends up in is a lot of over-taxation, especially if you compare to other industries, and it's unlikely to change. You'll probably see this being a recurring theme, which has been for a while, and unfortunately BAT has to deal with it. In as much as it's performing well, it still has to take on that burden. What sometimes is viewed as unfair is, for example, year in, year out, taxes are being increased, but there also been other measures have been introduced, such as the Solatium contribution, whereby apart from the taxes they are paying, for example, last year about 6 billion to the government alone, they still have to make a certain contribution towards the Solatium fund, which will be able to go to, for example, cancer programs and all these programs that aim to fight against the effects of tobacco. So yeah, definitely tax overreach, but unlikely to change in the near future.
Pretty much. Now, Justin, this is a direct question from some of viewers this morning were asking, what is really particular, interesting about this particular stock? What makes BAT a performing stock? Because if you look at 2020, when majority of companies, even in the country, were cancelling their dividend payouts, BAT already did fork out a 45 shillings dividend payout. Again, we go back to 2021, leading again in that record dividend payout. In fact, if you look at the government yield now in the one-term T-bills that any other short-term investor might want to get into, BAT will be a better option? Because now the yield currently stands at 11.4%, government stands at 9.7%. What is particularly interesting or unique about BAT that makes it a performing stock time in, time out?
From an investor point of view, when you invest in any share, you're looking at capital appreciation and dividend yield.
Yes.
For BAT, it's known as one of the best dividend stocks because year in year it will give you a very good percentage. Right now it's about 11.4%, as you said. I think the list over the last 5 years has been about 7%. So it's going to give you a good dividend yield. If you compare this, for example, government securities, 1 year treasury bill is about 9%. So you're getting something that is tangible, something that is will be able to help you as an investor. Then if you look at the actual capital appreciation, BAT's share price always performs well. What happens is every beginning of the year, it usually we see a huge increase because of the dividends announcements. But then even after that, it doesn't drop too much. Of course, the market corrects itself, but it doesn't drop too much. So if you just hold on to the stock, wait for the dividend payout, and even if you need to sell, once you're selling it, you won't experience capital losses on the money you've put in. So overall, a very good investment to make as an investor. And this is all based on the fact that this is a very mature company.
Yes.
She has a very mature market. She has very sticky clients because, for example, if someone smokes, they smoke. Regardless of how tough the economy is, they'll probably find that they still have some money, they go and buy a cigarette or two to smoke. So that sort of situation whereby they have very sticky clients, even if they increase their prices, these people will still buy their products. Then is the reason why they keep performing well. We haven't had reduction in gross revenue in a while. Even when it was there, it was very explainable. It was very marginal. So overall, now the biggest challenge with BAT is that you wouldn't expect to see a huge increase in revenue because the number of people who are smoking is not increasing significantly.
Yes.
As more and more people move even away from example, tobacco products to the tobacco-free products, what they try to focus on in the future. And because of this, then you're likely to see significant capital appreciations year on year. But on the dividend end, definitely you're going to receive good dividends from this company.
Yes.
And they always pay 85 to 100% of their net profits to the shareholders. So all the money they get, they distribute because they don't need to keep investing. They've already invested. They're at capacity. They're providing as much as they need to. So I think that is the biggest attraction towards this stock.
Yes. Lastly, as we clear on this particular issue for this performance for BAT for the period ended 31st December 2021, Justin, we do know that we've not really factored in the nicotine pouches business in this particular result. What outlook will you give them? Because this is another potential area that they see as a proper revenue source for them, especially after the government cut this tax for this particular area by 76%.
It's a tough one, and
yes.
The reason for that is if you just focus on the business end, it's based on the few months that it was trading as Lyft. It's a very popular product.
Yes.
But then, of course, now you have the lobby groups pushing for the same high taxes being applied to tobacco products, to be applied to this tobacco-free nicotine product.
Yes.
Now it's a matter of managing stakeholders now for BATs, engaging the government, engaging the lobby groups, try and see if there's a way they can reach a middle ground whereby BAT is arguing this is a new product. We've already put in 2.5 billion shillings into a manufacturing plant in Kenya. So the government should be at least encouraging such investments, number one. Number two, as a new product, at least give it some room to grow before you can start charging it those high tax rates. So if they're able to do this, convince the government and be able to reach some sort of middle ground, then definitely you'll see this as a new source of revenue because, as I said, tobacco or cigarette sales are unlikely to increase significantly. So this will definitely boost its bottom line even more. So if they're able to do this, we'll likely see BAT even performing better than it has in 2021 going to the future.
Pretty much. All right, Justin, if you may allow us, let's move on to the next issue that we have for you this morning, where Treasury now wants to change the law to be able to borrow more after the National House rejected their proposals to borrow 846 billion shillings in the next financial year. Now, the Parliament's Budget and Appropriations Committee set a ceiling of 400 billion on the new debt to avoid breaching the 9 trillion shillings loan ceiling. Now, to avoid running into this hurdle, Treasury has now introduced changes to the Public Finance Management Act to move the limit from a fixed nominal figure to 55% of the gross domestic product. Wow. Now, budget papers indicate that even with the Treasury running out of time to meet deadlines, they sought to use the AG's office to have the bill pass promptly, but later they were advised by the same AG's office to have the changes through an independent bill. This did not stop the Treasury, who later said they would present the bill through the legal notices after public participation, advising that the budget policy statement be passed even if it was in breach of the debt ceiling. Now, Treasury wants to spend 3.2 trillion with a budget deficit of 846 billion, which would automatically breach the debt limits since Kenya loans will hit 8.6 trillion in June this year. Wow. All right, let's look at that debt profile in the country just before we jump over to Justin, just to make sense of this. You can actually see that indeed, when we come to Treasury bonds, they're the leading in terms of the local debt profile, then Treasury bills follow, and then overdraft at the CBK. We did actually see this happen when the CBK granted the country a first bailout in 2020 at the height of the coronavirus pandemic, and other domestic debts then would follow in that particular order. Justin, it's worrying that this debt ceiling that we introduced, the 9 trillion, hasn't lasted 2 years. Justin, it has not. In fact, it was supposed to last us all the way past 2022. That's what we had envisioned. In fact, the Treasury is the one that championed this low change to the current 9 trillion. There was a lot of talk from Ukur Yatani as well. We need to have it at 9 trillion, saying it was quite confident that the country would remain within that ceiling all the way up to after 2022. Fine. We created an uproar as Metropole Television as to why a nominal figure will not represent what used to be there before. It was 50% of the GDP, but that went to the National House. Seemingly, it passed without any trouble. Fast forward into the coronavirus pandemic, and then out of the coronavirus pandemic season, again now Treasury, after rebasing GDP, have gone back to the National House. Now they want to revert to what it used to be back then on the basis of GDP, but now they're saying it's got to be 55% of GDP, meaning since we rebased our GDP the other day in 2021, they would have more leeway to consume more debt. Justin, from what you've said, is this mischief from Treasury that they can do what they want?
No, I don't think it's mischief. I think it's been necessitated by a country's continued high expenditure levels.
Yes.
It reaches a point. If you look at, even if the country were to maintain its budget for last year, even 2 years ago, it will still have more than the 400 billion deficit
Yes.
that it needed. That is remaining, or that is available before we breach the 9 trillion
Yes.
mark. So mistakes have been made in the past. This is now signs of us we're getting to the point where we are seeing the effect of the mistakes that we have made.
Yes.
We increased, as you said, the Treasury championed that from 50% of GDP to 9 trillion. At that point, it seemed so far we were at about 5 point something.
Yes.
So it seemed like we will go for a decade or so, and we will be fine. But here we've extensively, we borrowed so much even from externally, before even the corona pandemic. Now the coronavirus pandemic came, we had to borrow now even more because we have to support the economy. So it reaches at a point whereby even as you look at the economy and you look at the expenditure level, some of those go into very important arms of the government. We have to borrow for us to keep, for us to meet the expenditure levels that we already used to, the already high expenditure levels that we are at. So it's not mischief. I feel like it's very necessitated. unfortunately, it's a very unfortunate thing, because even if the parliament says don't borrow more than 400 billion, that will mean a lot of other functions of the government, or especially development-wise, will be affected into the next financial year, and it will be almost unrealistic. Now, what I like, at least from the Cabinet Secretary of National Treasury, in their explanation to the Parliament, was how they were saying they will come up with ways in which they will be reducing that particular debt level to
Yes.
the 55% of GDP.
Yes.
Of course, we have had this before. We have still continued to borrow. The continued commitment and the continued positive sentiments for them to reduce is encouraged, but we're at a point whereby if we don't borrow, then I'm not sure we can be able to repay our debts, because sometimes we borrow and just to repay some of the debts that we have.
Pretty much. But Justin, I want to take you back again. I mean, when we keep on changing, there was a very firm reasoning as to when Treasury was saying, well, we need to introduce just a nominal figure to that. Then they gave us 9 trillion. Very interesting conversation. In fact, Ukur Yatani said, well, our debt sustainability is way above there. We don't need to worry. We just need to understand that it doesn't make sense for us to say it's 50% of GDP. In fact, he continued giving examples of saying other nations that have got a higher debt profile are not just sticking to GDP. The thinking behind GDP, Justin, is that indeed then you will borrow what you can be able to repay. But then, Justin, this is coming just after we replaced our GDP back in 2021 when we added the 500 billion into it. Is this no Treasury going back and saying, and that's what I'm asking, is there no mischief when they're even going through the AG's office to have it passed for it not to go through the House? Is there no mischief, Justin, when you look at it from that perspective?
No, still, it's not the best approach for a government to switch its guidelines. For example, as you're saying, having the debt level or the debt target as a percentage of GDP is the best approach. That's where you can be able to tell how much you can pay back.
Yes.
Now, it pushed it to 9 trillion because at that point, it had already breached the 50%. It was at 55%.
Yes.
So it pushed it 9 trillion, allowed it so much room for it to borrow. That way, wouldn't be saying that we're in breach of anything, which was okay at the time. What I think they should have done was increase the percentage while committing to reduce it over time, which is essentially what they've done now. But I'm still hesitant to call it mischief. I feel like they're at a point whereby they have to do this. The Parliament has put its foot down, saying, you asked us for the 9 trillion, we gave you the 9 trillion. Now you've come back, you want to change the goalpost. And we are not okay with this. You need to do your work and ensure that we are spending within what we can be able to raise in the economy, which is a very good and fair point. So not mischief, but unfortunately we have very, very poor debt habits as a country.
Yes.
We keep on borrowing and borrowing. Our expenditure keeps on rising, despite the fact that we need it to keep declining instead.
Yes. Justin, as we clear this conversation on debt, and everybody listening to Ukur Yatani, in his last submissions, he said that when he looks at our debt profile as a country, it is sustainable. But then he turns around and says the only thing that we should be worried about is our capacity to carry this debt. Justin, how confusing are those two statements? Why can't he just say it is unsustainable so that we sleep with it?
I mean, you can't have you don't expect that statement from the National Treasury. You expect that from the Parliament or from any other arm of the government, not the arm that is actually borrowing the money. So if you're waiting for that, probably won't come.
Yes.
But if you look at the actual figures, then they're very worrying. If we continue borrowing at the exact same level that we've been borrowing over the last 4 years, then definitely this debt will end up being very unsustainable.
Yes.
Right now, the debt we have, we can definitely be able to pay them. Of course, the usual focus is on the usage of these funds. Even as they keep comparing us to Japan and all these other countries that have really high debts to GDP ratios, the usage of the funds is what matters, not even the percentage matters less. So I think as a country, currently we're able to repay the debts that we have, but given the pattern that they have showed and how much they keep on borrowing, then it may reach a point in the very near future whereby our debt will be unsustainable. We will reach a point where there's so much of a cash crunch. We'll have very serious measures as we had the last couple of years, such as freezing of parastatal hires, and this time even worse, high taxation is the most likely thing that will end up being as a result of this unsustainable debt. Will also have so little development expenditure as well.
Pretty much. Justin, this morning I'd like to thank you very much for joining us this morning on this conversation. I'd like us to take a break, and once we come back, let's ask that important question. Another confusing question as well, just as debt sustainability and debt carrying capacity is also confusing. There's this other confusing question. Digital currency is being piloted by the Central Bank of Kenya. But then the Central Bank of Kenya says our conversation on a digital currency is well known, that we have nowhere to place it. So you wonder, what is the Central Bank of Kenya against? Is it Bitcoin specifically or just digital currency? But why would they be against it when they are piloting the CBDC? That's the Central Bank of Kenya digital currency. Once we come back here on a Business AM.